morning. Welcome to Trading Hour. I am Reema Tendulkar with Nia Sumera Abdi and Pavitra Pari. Good morning, girls. Markets have started slipping a tad bit as we speak. So we're down about 100 points on the Nifty. In fact, more than that, 111 gone on the Nifty as we speak. The Sensex is down close to about 400 points. There you can see we're pretty much at the low point of the day. But even after this big cut, we're still outperforming the rest of the Asian markets, which is struggling with cuts of close to about 1.5%. Hang Seng, Korean markets, Taiwanese markets are all down in excess of close to about 1.5%. The China economic data has disappointed the street. August exports have grown by 7.1%, lower than consensus expectations of 12.8%, and Nomura has further downwardly revised the China GDP. They now expect FY23 China growth to come in at 2.7%, lower than their August estimate of 2.8%, and before that their estimate was close to about 3%. Their analysis shows that 12% of China's GDP is now affected by COVID controls on a weighted basis versus 5.3% just last week. Remember, Chengdu has gone into lockdown. The Shenzhen district has also tightened the restrictions. So COVID is spreading fast in China, and that's impacting the economic activity. Talking about the sectors and stocks in focus, cement is having its day today. So across the board, gains seen in Shree Cement, Ultratech Cement, FMCG's higher in trade, led by Nestle, Britannia. Bharti is struggling, 1.8% equity changed hands via a block deal today, and IT continues with its underperformance. You know, the Nifty peaked at 17,992 on the 19th of August. At that point, the Nifty IT level was close to about 30,500. So from the August peak levels on the 19th, that's the date, the Nifty is down 2.3%, but Nifty IT has nearly fallen close to about 10%. So IT continues to get battered lower. Hi.
Hi, good morning. Absolutely, IT is definitely not doing so well. You mentioned cement and some of the larger names, even the smaller stocks, the likes of JK, Birla Corp, all doing very well in this otherwise weak-looking market. FMCG, like you pointed out, is doing really well. But let me look outside of the Nifty packs, and Sreema has taken you through that. So a lot of the hotel stocks are doing very well. Let's pull a few of those up for you. The likes of Kamath, you have Indian Hotels, Lemon Tree, all clocking in good gains, and they're up on your screen. Some of the other, restaurant players, retailers are doing well. So take a look at Shoppers Stop. In fact, Shilpa spoke to the management, and they look sounding extremely optimistic on festive demand. So that one is up almost 6%. Specialty restaurants seeing a gain of 10%. And of course, even for the past year, the stock has seen a huge up move. On the downside, well, you have Reliance, which is not doing so well. And in spite of that, our markets are holding up. So right now, it's down almost 1%. Some of the auto ancillary companies, so whether it's a Lumax, Auto, Rani Brake, all of them holding up well. And like Reema pointed out, of course, tech is also leading the index lower. So that's what we have in terms of the market action, and we'll keep coming back to this. But hi, Sumera.
Hi, girls. Good morning. So we have a lot in store for you. So let's get started with all that is lined up. The market has slipped to near the day's low. There's slight outperformance that we're seeing by the mid-cap index. To discuss the way forward for the market and also the top sectors to keep on your radar, we'll be joined by Jigar Mistry of Buoyant Capital.
Blue Star is in focus on the back of two new orders worth a total of 390 crore rupees. B. Tyagarajan, Managing Director of the company, will be joining us to discuss more on this.
Pharma is in focus too, with Biocon selling more than 5% stake in Syngene for over 1,200 crores. Siddharth Mittal, Managing Director and CEO of Biocon, will join in to talk about this.
Tech giant Apple is all set to unveil its next generation iPhone 14 at its much-awaited annual media event at the Cupertino today. What's new and what's out at the big reveal? All of the details coming up for you in just a bit. So all of this and lots more over the next 60 minutes.
All right, but first let's invite Blue Star on the show today. The company won two new orders, which are worth 390 crore from Bangalore Metro Rail Corporation. B. Tyagarajan, the Managing Director of Blue Star, is now with us on the show. Good afternoon, good morning, sir, and thanks so much for joining in. Can you tell us a little bit more about this order win of 390 crore from Bangalore Metro Rail Corporation? What's the timeline of execution? What are the margins that you will make? And what does this take your order book to? And also the kind of revenue contribution that you get from metros now, and is it going up?
Thank you. Good morning. Metro Railway has become an important part of Blue Star's electromechanical projects business this year. On hand, we have totally around rupees 824 crores worth of orders. This includes Mumbai Metro. There are 2 orders from Mumbai Metro, and in fact, actually 3, with the depot being revived in RA Mill Colony. And the Bangalore Metro order, as you rightly mentioned, amounts to 200 and 390 crores. Now, these orders are for environmental control system, electrical, mechanical, tunnel ventilation, firefighting, and hydraulics all put together. Bangalore Metro orders, it will be around 24 months of execution period. And the Mumbai Metro orders are already under execution. I think in about a couple of years, Mumbai Metro orders also will be completed. You asked about the pending order book status. For Blue Star as a whole, I think we are close to around 3,980 crores as of September 1. It is around 25% higher than what was last year. That's the case with most of the businesses, including commercial refrigeration. Metro orders, further, quite a few cities are going in for, and I think we will be successful bidders in a few more projects in the coming months.
Could you just repeat what you said is the full order book right now?
It is 3,980 crores as of 1st of September.
Okay, and
it is around 50% higher than last year.
All right, and what part of this would be executable within this year in FY23?
Normally, you take it as around 50% of it will get executed because there are quite a few orders which are book and bill like that. And now, you all talked about the margin that we have always maintained that it is going to be somewhere around 5.5 to 6% operating margin is the projections we have given for electromechanical project segment. And we had indicated it will be 8 to 8.5% for the unitary product segment.
Okay. Hi, Mr. Tyagarajan. Morning, sir. So what is the kind of visibility that you have in terms of contracts from, various metro projects? As of now, what is the percentage these orders contribute, to your order book? And, what is the upside or what is the headroom that you have to bid for more?
The total value of the metro railway orders we have in hand is around 824 crores. You can imagine out of 4,000 crores, pending orders, 824 is our pending order here. Now, I'm sorry, there is some siren.
No, that's okay, sir. Please carry on.
So, we do have visibility of around another 300 crores worth of orders within this financial year.
3,000 crore of order visibility for the consolidated business, including unitary cooling and EMP, or is this for EMP?
So, Blue Star spending order book consolidated is 3,980 crores. Okay. And out of which 824 crores is metro railway order alone. And if you look at, you asked a question, how much more metro railway orders could be booked? It could be somewhere around another couple of 100 crores orders are expected within this financial year.
Would you need any fresh capex to service these metro orders, sir?
I don't think so, because in electromechanical projects, you do not need any kind of a capital. It's only working capital. But whereas you're aware, we are on a massive expansion as far as the products business are concerned. So we have just commissioned the deep freezer facility in Vada. There is another one that is coming up in Sri City, which will be commissioned in November.
Okay. Which are the other cities where the metro bids have opened or are likely to open? Because you spoke about more order wins in the range of a couple of hundred.
In Bangalore itself, there are quite a few other projects are on, and you will have the Surat coming up. And practically all cities, there should be some kind of metro orders that should be getting finalized within the next 12 months period. See, the construction cycle is on. That is the most important thing. So we went through a phase where you couldn't scale up this business because the social as well as core infrastructure projects were not happening. Now we do have quite a few activities happening, including building sector, factories, or the power plants, as well as metro railway, and quite a few airports coming up. You will see next year onwards, quite a few airport orders also should be getting finalized.
Okay, sir, you were mentioning the margins. Can I just ask you, when do you expect it to go to the pre-COVID level? In Q1, we saw around 6.2. Pre-COVID, you had around 7.2. Do you have any visibility on when we can get back to those levels with, costs also coming off quite significantly?
Margin should begin to improve from Q3 onwards. You will not see any benefit in Q2 because we did have raw material that were procured earlier for the summer season. I think from Q3 onwards, you should see improvement in margins. It is coming out of the raw material softening as well as the scale that is getting built.
So Q3 onwards, we could go back to the 7% kind of level?
That's right.
Okay, got it. Sir, if we can just zoom out a little bit and talk about the overall demand trends that you're seeing. We do have the summer season, which is out of the way now. What is the demand looking like now with, of course, unitary products? Would have seen, in Q2, I'm guessing you would see slightly softer demand for this. But overall, if you can take us through what's going on.
See, the initial indications are it is just at the pre-pandemic level. So normally for air conditioners, festival season is not a great thing that you are aware of it. You should see activity building up only in January or so for the air conditioners. But if one can compare with the pre-pandemic period, it is almost at the same level. I think during Diwali, some more indication should be there. See, it was a huge summer season for us that we had grown by more than 35% during that period. Now, energy label change had taken place from 1st of July, so there were price revisions. So you have to wait and watch, and I am happy that the demand is holding up. We saw that happening during the Onam season now, and I think Diwali will be an indicator. But still, for air conditioners, this is not the season at all.
Mr. Tyagarajan, thank you very much for joining in. That's Blue Star saying their order book currently stands at 3,980 crore as of 1st September, which includes 824 crore of railway orders, which come in the electric mechanical segment, EMP as they call it, while the balance will be in the room air conditioning or the unitary cooling products. And the company is saying that in the next couple of months, more cities will open up metro orders and the company will be bidding for that. And demand so far is looking good. Stock is up close to about 1.3%. They're also confident about margins for the EMP business being maintained between 5.5 to 6%. Get into a break on that note. Up next, we'll discuss what's buzzing in the commodity space. Manisha Gupta is back. And we'll also be joined by Siddharth Mittal, the Managing Director and CEO of Biocon, to discuss their recent stake sale in Syngene.
Hi, welcome back. You're watching Trading Hour. Let's shift focus now to the commodity segment. Manisha is here. And today she's talking about natural gas. Hi, Manisha.
Hi, Sumaira. Well, yes, because the natural gas prices have been very volatile in this week. Remember, Monday we saw 30% of a jump, and this is after Russia shut the Nord Stream pipeline with the immediate effect. There was that knee-jerk reaction onto the prices. But the last couple of sessions, we have seen the prices decline so much so that we have seen $8 per MMBTU also break on the lower side there. So we are looking at prices falling quite a bit. If you look at this year itself, it has been a huge range of $3.5 per MMBTU on one side to $10 on the higher side. side. Well, markets also will be watching out for Europe, which says that they are going to take steps to rein in prices. It could be coming in form of capping prices to begin with and windfall taxes on energy company profits there as well. The new UK PM also says that she would be unveiling an energy rescue plan, and this could be coming in on Thursday. And on Friday, the European energy ministers are meeting up as well to talk about the gas prices availability and the prices as well. If you look at the US gas markets, well, that clearly is the biggest exporter, and the numbers there do look bearish as well. So when you look at the September output in sense of the US gas there, it is at 99.7 billion cubic feet per day. This is as compared to 98 in the month of August. So we are looking at higher supplies there. The US demand as well has seen a bit of a decline from at 92.3 versus 96.8 on a week-on-week basis. And there are expectations that you are looking at weather improving as well. So the gas demand that we have seen in the last couple of months perhaps would not stand as tall in the month of September there. Apart from that, when you look at Freeport, they are looking at a delayed start of the Quintana export plant for the month of November. That means if the US is not going to export until the month of November, those stocks also will be available in the US, so the inventories are on a rise as well. Is the reason you have seen some profit taking continuing in case of the natural gas prices. If you look at a week-on-week basis, we still are on the weaker side there. The markets have seen 13% of a decline. On a monthly basis, we are up by 5%, and clearly the last 1 year we've seen nearly 155% of gains continue to stand tall for the gas prices.
Manisha, thanks a lot for getting us all of the details on the gas prices and the latest with the price move. But with that, let's move on and invite another corporate on the show. Biocon is in focus as the company sells 5.4% stake in Syngene for 1,220 crore rupees at an average price of 560 rupees a piece. Siddharth Mittal, Managing Director and CEO of Biocon, joins us now to discuss more on this. Mr. Mittal, good morning and thanks a lot for joining us. This is Pavitra. So to begin with, if you could just tell us why you've sold the stake in Syngene, and also what we want to know is that are you looking to sell any more, or is this it for now?
So thanks, Pavitra, and good morning, and thanks for having me here. I think yesterday, as you said, that we sold 2.18 crore shares in a block trade at 560 rupees and raising, give and take, $150 million. Now, as you are aware, that Biocon Biologics is acquiring the biosimilars business of Viatris for a total consideration of $3.2 billion. And of this $3.2 billion, $2 billion will be paid in cash upon closing. And to fund this, there was a commitment done to Viatris that in the current shareholders and investors would pump in minimum of $500 million. So Biocon Limited, which is a parent of Biocon Biologics, has to pump in minimum $235 million contractually. And to part fund this investment, we have raised $150 million by divesting roughly 5.5% in Syngene. Okay. And now with this sale of Syngene, we do not expect to divest any more shares in Syngene. And we also have committed to a 90 days lock-in to the investors who have invested in this block trade.
Okay. All right. Mr. Mittal, hi. This is Ekta joining into this conversation. Just before we get to the interest that you've seen in this particular block that took place, you had a commitment, like you said, of around $235 to $250 million in terms of an equity investment for Viatris, the PE component, which Biocon will be committing to. You've raised around $150 million. You have maybe $100 million to go on the upper end. Tell us where that money is coming from, the additional $100 million.
See, there are multiple ways we are going to raise this money. And in fact, we might increase our stake on beyond 235 million minimum investment. So there are structured investments, there is a debt option, and there is already cash available on Biocon's balance sheet of over $100 million. So right now, while we are working out on the bigger fundraise at Biocon Biologics level in terms of debt and equity, at the minimum investment that Biocon has to do with this $150 million, we are very comfortable.
Okay, so just to put this, into perspective and to just provide some clarification on that, you will not look to currently sell more stake in Syngene to fund that additional $100 million, which is required in terms of the equity component. You're going to look at other forms and manners to fund that $100 million. Can you clarify what that could be? Could that be other sort of stake sales, any kind of non-core asset divestment? Okay, I think we've lost Mr. Mittal. We're going to get him back on. But this is going to be important in terms of, how exactly they're going to be funding the Viatris deal, which is expected to close in the next couple of months. Biocon has an equity component of around $800 million. $550 million was expected to be from the current PE investors as well as Serum, and $250 million from the likes of Biocon. So they've raised around $150 million from this stake sale, which they undertook yesterday in Syngene. So where is the additional equity component coming from is something that the street would definitely want to know. We're going to get him back on in just a couple of minutes, but back to you guys till then.
Okay, so here's what we'll do. We'll get into a very short break. When we return, we'll have, Siddharth connected. But in the meanwhile, we'll also, invite Mitesh Thakkar on the show. So when we return from the short break, we'll have a few technical trading ideas as well. Stay tuned.
Welcome back. We still have with us Siddharth Mittal, the MD and CEO of Biocon, to talk about the stake sale which they undertook in Syngene yesterday, raising over 1,200 crores. Mr. Mittal, if you could just clarify then this additional $100 million, you said you're not probably looking to sell stake in Syngene anytime soon, but is that totally off the cards, one? And two, any other kind of divestment on the cards for you to raise that $100 million equity component, at least the minimum?
Yes, so for now, additional stake sale is completely off cards. And as I mentioned, we've also given a 90-day lock-in for the promoter not to divest any more shares in Syngene. And we already have $100 million plus in our cash reserve at Biocon Limited level. So as soon as the transaction is ready to close, we have the funds available to the tune of $250 million. However, we also have debt lines. There's hardly any debt in Biocon Limited balance sheet, so we can raise funds overnight. And plus, we are also talking to a few other investors who are interested to take a stake in Biocon Biologics, but invest in Biocon through a structured deal. So there are multiple fundraise discussions going on, and we are very confident that we'll be able to fund this $250 million plus additional amount that we are looking to invest in Biocon Biologics upon closing.
Okay, so you were supposed to raise at least around $550 million from your existing PE investors, including Serum. That, along with $250 million from you, would be the $800 million total equity component for Viatris. Where does that $550 million stand in terms of funding from the existing PE or new PE investors as well as Serum?
So we already have term sheets with investors, including Serum, and if certain new investors who are looking to invest in this business, they are in final stages of diligence. And I think the main thing at this stage is receiving all the regulatory approvals to close the deal. And as soon as the approvals come in, we should be in a position to invest that $800 million. In fact, the demand is very strong from equity investors' perspective, and we are trying to see if we can increase the equity investment and reduce the debt component from 1.2 billion down to a more reasonable level.
So Serum was in particular looking to raise stake in Biocon Biologics. They have, I think, around 15% stake at this point in time. How much are they probably going to hold eventually?
See, with $300 million up to $300 million additional investment, which we have said in the past that Serum wants to invest up to $300 million. And post-dilution resulting from Viatris acquisition, Serum would be holding anywhere between 12 to 13% of the company.
So Serum is looking to invest an additional $300 million in Biocon Biologics, which would be a part of the equity component funding?
That's correct.
Okay. And when are we going to see this entire closure take place?
See, we had informed the market that we expect the closing by end of this quarter. Of course, this is all subject to receiving necessary approvals. We have got certain approvals, and we are awaiting certain other approvals. So it should be anytime. If we miss this month, then hopefully it will be in the first half of next quarter.
Okay, this over $1 billion that you're looking to, I think it was a $1.8 billion debt commitment that you had received at one point in time. You're looking to reduce that debt commitment as well. Give us a structure eventually of how exactly the Viatris deal would be funded. How much is the debt commitment right now? How much have you already raised via debt? What is the structure of debt? And how much interest are you paying, considering that we're in a higher interest rate environment as well?
So, Ekta, these things are still being worked out. Initially, we had said that 800 million will be funded through equity and 1.2 through debt. But post our discussions with the private equity investors, we have seen a very strong demand to invest in equity. And we are considering options which will also give investors a comfort that the debts are not very high levels. And we are very open. So right now we are at that stage where we are discussing with our banks on the debt front, and we are discussing with private equity investors on the equity front, and the final decision in terms of the split between debt and equity would be taken in a few days. Oh. And the debt rates, of course, when we announced the deal way back in Feb, the debt rates, interest rates were quite reasonable. Since then, we have seen a couple of rate hikes from the Feds. So we would see an impact of that. But that said, the cost of debt is still within a very reasonable means, within 2 to 3% per annum.
Okay, all right, Mr. Mittal, we're going to leave it on that note. Thanks very much for joining in and speaking with us and giving us all of those clarifications that no additional stake sale in Syngene on the cards as of now. But remember that they do have an additional equity component which they need to complete in terms of fundraising for the Viatris deal. They've seen a lot of interest, they've said, which has come in from other investors, new investors, and Serum would probably look to put in around $300 million additionally into Biocon Biologics. So that's a big headline coming in from Biocon.
Ekta, thank you very much for that. As promised, let's also invite Mitesh Thakkar of EarningsWave.com on the show to talk about the market technicals and where we are headed. Mitesh, another down day for our markets. Is this an opportunity to go long?
Good morning, Rima. The market actually, opened much at a better space to go long. Right now, basically, I've been maintaining the outlook that we are doing a range of about 17,750 to about 17,400, and somewhere in the middle of the range. So maybe not right now, but if we get it closer or just below today's low, which is around 17,450, 420 zones, then I think longs can be explored with a 50-point kind of a stop loss. And on the upside, I think 17,750 remains the pivot to book profits. Also, this consolidation might last for next few days. So next few days, the idea should be to buy on dips and then be nimble in taking profits.
Okay, what about the stocks, Mitesh?
Yeah. On the stock side, cement is clearly a sector which is buzzing and is showing great strength. So I've identified Ramco Cement amongst the cement pack. That's giving a good breakout. That's a buy. Keep a stop below levels of 763 here, and a target of around 815 can be looked at. And other stock on the sell side is Tata Motors. After a long time, we are seeing a negative breakdown here. That's a sell with a stop just above levels of 453, and look for targets of around 430 on the downside.
Okay, Mitesh, thanks very much for joining in with your trading ideas. We're going to take a very quick break now, but as we do that, here's a quick reminder for our viewers. It's that time of the year again. Money Control Pro's Financial Freedom offer is back with added benefits. So get a Money Control Pro subscription at net zero cost by claiming exciting offers worth 1,500 rupees from our partner brands. Grab their benefits now only on the Money Control app or website. Hi, welcome back. It's that time of the year again when tech giant Apple takes center stage with its much-awaited annual event in Cupertino. And as Apple gears up for the big reveal of iPhone 14 at its mega event Far Out today, Rima is standing by on the big wall to tell us all about this new generation phone and what is in store at the event.
Thanks so much for that. So all eyes are going to be on Apple today, the world's biggest company and the most influential. It's all set to unveil iPhone 14 series at the Far Out media event today. This is the most anticipated and awaited annual event. It will take place at the Steve Jobs Theater in Apple Park campus in Cupertino, California. So what's expected? The new generation iPhone 14, which is likely to come in 4 models. The base model 14, iPhone 14 Max, iPhone 14 Pro, and then iPhone 14 Pro Max. But the biggest change this time is going to be that we're unlikely to be getting an iPhone 14 mini. Remember, we had an iPhone 12 mini, we had an iPhone 13 mini, but this time Apple has decided to go against Apple 14 mini, and that's because of sluggish sales. But again, this is what rumors are. Now let's move on. With every subsequent launch, there is always going to be an improvement. The camera gets better, the processor gets better. There are going to be some design changes which can help users get more screen space. But the one I'm personally excited about, and this is again a rumor, is that the display this time is going to go back to having a battery percentage in numbers and not just a visual representation of how much power your iPhone has left. So currently, all you Apple users will concur with me that every time you need to know how much battery life you've got, you have to swipe down to the control center to see the exact battery percentage. The current iPhones only have an icon of the battery. So this time, Apple 14 is expected to have the battery icon plus the numerical percentage. The question is, should you be rushing out today, tomorrow to go out and buy the latest version of iPhone 14? Well, people in the know say that iPhone 14 is largely going to be similar in its form factor to iPhone 13, with minor upgrades, minor tweaks. So probably there is no reason to rush out and immediately buy a new iPhone 14. If you remember, the last big upgrade in Apple phone was in iPhone X, the 10 one, which ditched the Touch ID with your finger and went with a Face ID for locking and unlocking. So that added to the screen space. This time, we're not expecting any kind of a dramatic change as we did. The next big one that analysts are watching very closely, which we're unlikely to get this time, is will iPhone imitate its rival Samsung and come out with a foldable version? But that's not for this year, perhaps not even next. The next topic is what to watch in terms of iPhone sales and pricing. Now, iPhone is not only amongst the most expensive phones, it's also the most popular, at least in the US. iPhone has now overtaken Android to claim majority of the US smartphone market, and that in itself is a very big feat. The installed iPhone base is expected to be 1 billion. And if you assume the average life of a phone or an iPhone to be 4 years, we're looking at sales of 250 million units on an annual basis, and this is without enticing new users. Now the point on pricing. Now, since the last few years, Apple has not increased the price of the base model. iPhone 12, iPhone 13 series all started at $799. But of course, the subsequent versions, the Max versions, were more expensive and they carried a $1,000 price tag. But this time, will Apple increase the base price as the cost of components and the supply chain disruptions have resulted in a higher cost of production? That is something, as an iPhone user, I will be watching very closely. Back to you.
All right, Rima, thanks a lot for taking us through everything that we should expect at this launch event. All eyes are on that, and we'll, of course, bring you later tomorrow through, all of the announcements that do come through as well. With that, a quick look at the market, which right now is seeing a cut of around 90 points. The mid-cap index is back in the green, so let's quickly take a break. When we come back, we'll discuss the way forward for the market. Jigar Mistry, your boy in Capital, will be with us. Hi guys, welcome back. You're still tuned into Trading Hour, and we have a guest joining us. Jigar Mistry is joining us now, a buoyant capital. Jigar, good morning, and thanks a lot for joining us. This is Pavitra. So, a theme that we've been talking about so much is India sort of decoupling from what's happening globally, right? Even within Asia, we've seen all of the markets seeing slips between 12 to 20%, and the Indian market has been quite resilient in that space. So how do you see it trending from here on?
Good morning, Pavitra. Thank you for inviting me on your show again. Yeah, exactly. So let's imagine if we were in August 2021, and if we were to accurately predict that Nasdaq will be down 20% in a year, Dow will be down 10%, crude will be $35 higher, FIs would have sold $35 billion in the coming year. I don't think any one of us would have been able to predict that Nifty will be up 4%. Right. So what has been achieved is truly spectacular. Some part of this, I think, also owes allegiance to the fact that the liquidity has been very, very strong. To some extent, the domestic investors have kept the faith. And very briefly, we entered a territory where 1 year returns were negative. But I think that got corrected after the June rally. More importantly, I think FIIs might be having a rethink because, after the Russia-Ukraine situation, they are probably reassessing that 50% of my erstwhile market, right, Russia, China, and Hong Kong, probably is no longer, good enough to attract as much flows as it used to. And therefore, India then becomes the de facto sort of destination. Also, Brazil has also moved up equally well. But Brazil then is a very resource-dominated sort of economy and GDP. So to that an extent, I would say, it's the flows that are driving it. But, I think we should actually take more steps further and look at whether this liquidity is likely to get matched or not. So I think two fundamental questions. The first is whether the liquidity can get matched. And, I think with the number of, IPOs that will be lined up over the next few months and the, lock-ins that will get over. I think we have seen a few. We will likely see a lot more in the next 2 or 3 months. The last 2.5 month rally, which essentially was sort of unmatched with the supply, might get questioned a little bit. The other more important question is that, fundamentals are not as strong as, they were, before the Russia-Ukraine situation. So crude obviously is something that all of us talk about, and that has increased India's exchequer cost by almost 5 lakh crores or 5 trillion. What we don't realize is that, urea prices have tripled, and India's urea bill will be, or rather subsidy will be something like 2.5 lakh crores. Or 2.5 trillion. So all this will likely question the fundamental. The decision we have to make is that, whether we focus more on fundamentals or on flows. And if we choose to focus more on fundamentals, then it is difficult to very aggressively buy into the rally. And flows are a little more trickier to track. And, therefore, I think the time to throw caution to the wind, I don't think we are there yet. With Fed sort of liquidity drawing, we will take a step back and reassess. But I think one needs to remain cautious at this juncture.
Jigar, morning. So what are the changes that you've made in your portfolio? Some of your favorites we know, like FirstSource, etc., in the mid-cap IT pack. But, considering that you are a bit cautious now, have you exited any of your favorite stocks, your holdings? Have you bought, some different stocks to add the defensive tilt to your portfolio?
Yes, good morning, Rima. So yes, I think cash as a percentage has gone up. We are a little low in deploying all the new money that we are getting. Also, you recollect financials, we were very, very, positive on going into September, October, November. I had started sounding like a broken record. But I think with the rally that has happened, we have taken some positions off on financials as well. I think the way we are choosing to play this is through, domestic facing services. We did discuss a few hotel names that are of interest. We did discuss, insurance, microfinance, which is very interesting. But I think sort of in generality, small and mid caps is a much lower part of the portfolio now for us than it was, say, in April. Cash is a much larger part, and I would say financials is also a little lower now.
All right, Jigar, we're going to leave it at that today. Unfortunately, we're out of time. We would have loved to chat a bit more, but we'll save that for next time. Thank you for joining us. It's time for a short break in the show, but when we come back, excerpts from our conversation with MD and CEO of Shoppers Stop, Venu Nair, is coming up for you.
Hi, welcome back here with Trading Hour. Now, retailers are pinning their hopes on the festive season as mobility is returning and there are high-ticket purchases led by pent-up demand. My colleague Shilpa Ranipeta caught up with Venu Nair, MD and CEO of Shoppers Stop, to understand how the early trends are shaping up for festive demand and how they've impacted sales and the company's growth outlook.
Now the festive season having started, and as we all know, it starts from the east, and it is very, very strong, and that's something which gives an indication of what to expect. And I think there are a couple of factors which are playing in. As we all know, after 2 years, this is the first full festive period that people will have without the fear of COVID, and that's obviously driving people into the shops, into shopping and indulging, because there are parties, there are events that are happening, all of which had been in the pause mode for 2 years. So I think that's definitely the one big factor that is driving it.
And is inflation still a cause of concern, though, or do you think the festive season will see people coming out and buy despite inflation? And currently, what's the kind of impact that you're seeing because of inflation? Are you seeing that people are cutting back on their expenses and shopping lesser?
Inflation is there, and I think we all feel that, we all see that, and that's definitely a factor. I think the segment that we as Shoppers Stop operated, and we are in the premium segment of the market, and there I think the impact is slightly lesser, and because of the fact that again people are prioritizing in times like these, they prioritize on quality, they prioritize on brands, they prioritize shopping with retailers like ourselves who they trust. And I think that's what helps us, because when times like these come, when the value of money is felt even more, people would want to go back to what they trust the most. And I think that's where, being a house of brands, as a retailer which is known for its quality, known for its trust, and known for experiences, I think we benefit from that.
Right. And the footfalls, are they well beyond or ahead of pre-COVID levels now? And also with respect to billing per customers also, are the bill values also pre-COVID levels? Give me a sense of that.
In terms of footfalls, footfalls are certainly ahead of pre-COVID levels now, on a like-for-like basis, and if I remember right, they were up 8% in the first quarter, and that's the kind of trend that we have been seeing. Now that was 8% at an overall level. Like-for-like was level or thereabouts, and I think that's the trend which we are continuing to see. This was for quarter one, and a similar trend now. In terms of the absolute spends, and I think this is an area where we've definitely seen a big upsurge. We've now had 8 quarters of continuous like-for-like growth in the average bill values. Okay. So over the previous quarter of the same period, for 8 quarters now, we've had growing bill values. Mm-hmm. And that's telling us 2 things. One, that the customer is loving obviously what they see. And second, because of the fact that they love what they see, they're putting more items into the basket. And that's certainly something which we are benefiting from.
With that, it's curtains down on Trading Hour from the entire team. Thank you for watching.